What's up, guys? Bitcoin's price per coin took a serious dive over the past couple of weeks. So the question is, should you be buying the dip? That's what we're going to cover on this video. You're watching More Money? Let's get it. All right, guys, welcome back to the channel. You guys already know what it is. My name's Tay, 20-year veteran of the investment game, and you're watching the #1 channel for people that want to retire early. And you already know, guys, smash that like button. It really helps YouTube know that this channel provides valuable content. And if you're new, please consider subscribing. All right, so another question that I'm getting from you guys is, how should we be looking at this Bitcoin decline? And actually, I made a video for you guys last week, but I didn't want to release it because I wanted to see how this thing played out. It's largely looking like Bitcoin is settling in the high 30s, low 40s. So this is where we're going to do our analysis. I didn't want to be the first guy to talk about this, but I did want to be the best. That's kind of how I try to do this channel. So the way that I'm kind of looking at this right now is you're going to decide whether or not you're going to buy the dip on Bitcoin, depending on how you look at Bitcoin. So if you look at Bitcoin as a store of value, this might be a fair price to purchase Bitcoin at. Whereas previously, in the last video that I talked about, I said that you wanted Bitcoin's price to come down a bit. If you're looking at Bitcoin as a network, this price is better than what you had it last time, because if you're looking at Bitcoin as a network, your valuation is way higher than where I'm valuing it at. Now, let's go into more detail. So let's start with looking at Bitcoin as a store of value. So of the 100% of gold and silver exposure that you would take, which is a part of your larger portfolio, maybe take 5% out of that and put that into Bitcoin. And really what that's doing is gold and silver in itself is a hedge against the currency. Well, so is Bitcoin, so to speak. So why not take 5% exposure to that? So really what you're saying there is that in the world of currency hedges, where gold and silver are the largest currency hedges, Bitcoin does have a place, and Bitcoin's place is approximately 5% of the market cap value of gold and silver. Well, then what is the market cap value of gold and silver? Well, if you just look at both of them together, the market cap value of gold and silver together is $13.5 trillion. Now, if you take 5% of that, you're going to be at around $675 billion. The Bitcoin market cap today is around $730 billion. So a little bit higher than the 5% of the gold and silver market cap, but you're largely where you should be. So if you look at Bitcoin as a store of value and its value rides based on where gold and silver pricing is relative to the US dollar, then this is a good entry point for you. It's a fair entry point. It's not an undervalued entry point. You are purchasing at approximately 5% of the value of gold and silver. As I would recommend, if you're looking at it as a store of value and you want somewhat of a value purchase, you'd purchase that at around 2.5% of the value of gold and silver. It's not there yet. It would have to be around $20,000 per coin to be in that range, but you're getting a fair price. Now let's move on to the second way of valuing it. If you're valuing Bitcoin as a network, then essentially you're using Metcalfes Law to value it. Now I'm going to link the video up here, which goes into more detail of Metcalfes Law, but essentially what Metcalfes Law really is the square root of the number of people that are on the network is what its value is. So any network, the more people that join to it, the more valuable that network becomes. Think about how much more valuable Facebook is as opposed to MySpace. And the reason for that is there's just way more people that are on Facebook. I don't even know if anybody's on MySpace anymore, but that just goes to tell you the value of networks and the cost of switching the network. For example, YouTube is the main platform for independent video creators. There really isn't a network as large as YouTube, and so the cost of switching over to another network become immense. So that's why YouTube really has a consumer monopoly in that space. Bitcoin largely has a consumer monopoly in the crypto space. So that being said, if you want to be more like Cathie Wood and value Bitcoin on its ability to be the winner of the crypto space, and therefore it gets most of the wealth creation, then you're using Metcalfes Law. And essentially in that case, you could be valuing Bitcoin at anywhere from $250,000 a coin to way higher. I think Cathie Woods, I may be mistaken, but I think she's looking at Bitcoin worth something around $500,000 a coin. So, I mean, it is possible if more people get onto the currency. So there you have it, guys. This was a bit of a quick one, but if you're looking at Bitcoin as a store of value, this is a fair price that you're paying right now. If you're looking at Bitcoin as a network, this is as good a price as you're going to get. So if you're continuing to purchase it, it's worth still purchasing. Personally, I'm not really purchasing Bitcoin at all. I don't purchase gold or silver either for my portfolio. I'm largely looking for companies that I described in the previous video that have inflation protection, they are globally diversified, and they're leaders in their industries that can hedge out problems in the overall market. And so I'll continue to be looking for those types of companies for my portfolio. But I know not everybody invests the same way. Some Some people like gold, some people like miners, some people like Bitcoins. So no judgments in those cases, but I think you guys find a lot of value from hearing about Bitcoin and those types of investments from people who not necessarily investing in those areas, but are looking at them in the most sound approach possible. All right, guys, I'll leave it there. I'll see you guys later.